Good morning and welcome this morning to Cryptocurrency Basics, another great webcast from Schwab Coaching. My name is Ben Watson. I'm an education coach and senior manager here at Charles Schwab. I'm joined out in the chat by my good friends Scott Thompson and Patrick Cuomo, who are going to be helping out with the chat here this morning. Coming up in just a moment, we're going to be introducing you once again to the man who needs no introduction, Jim Ferrioli, the director of crypto research and strategy at the Schwab Center for Financial Research. We're going to be talking a little bit about some of the things that are moving today as we've kind of transitioned out of the concept of talking through some of those cryptocurrency basics. We've done several iterations of the series of webcasts where we're focusing specifically on how cryptocurrency works, some of the forces behind it. Now we're pivoting to perhaps a little more dynamic discussion of what's going on in the here and now. And so that's where we're going to spend a little bit of time today. In fact, today's webcast is intended to be 30 minutes in length. So we've got some stuff to pay attention to this morning. So buckle up. It's going to be an interesting ride. A couple of quick disclosures that we need to take care of and quick housekeeping items before I bring Jim on board the discussion. Remember that everything we talk about is simply for illustrative and educational purposes only. It is not any kind of a recommendation about any particular security or strategy or instrument or account type or anything else. Remember that we're going to use some technical analysis in this discussion. Schwab doesn't recommend use of technical analysis as a sole means of investment research. It is theoretical in nature, as is every other kind of analysis. Past performance, no guarantee of future results. Now, some very specific comments that I want to talk about. Digital currencies are highly volatile. They're not backed yet by any central bank or government. Digital currencies lack many of the regulations and consumer protections that legal tender currencies and regulated securities have. In some cases, that's by design. However, what that does is it means that those currencies and related products are highly speculative, carry with them an element of risk. Those additional risks are still developing and are not fully understood and will continue to develop. So make sure that you understand some of those risks, read the full risk disclosure regarding crypto risk assets, and keep an eye on the idea that cryptocurrency investing and cryptocurrency related investing, because they do carry that substantial level of risk, may not be suitable for all investors. So understand that as we talk about these ideas. So we're going to talk about these products and the technologies associated with them in a couple of different ways, not only as a reflection of what's going on in the market, but also looking for some of those individual names, not as a way of recommendation, simply illustrative examples of forces that are at work and the related outcomes. Now, we're going to be using the Thinkorswim desktop software platform, specifically the paper money version of the platform. It is a great learning environment. However, it is not a guarantee of future success out there in the real world. It does have some limitations relative to a live trading account, namely around studies in scans and those types of things. So all of those other disclosures that we normally talk about around stop orders and other things will apply, and we'll call those out as we get into those discussions. Now, when we talk about futures contracts in this discussion, and I'm just going to point this out again as well, virtual currency derivatives, including virtual currency futures contracts, involve those unique and specific risks. We're not specifically going to be talking about trading the futures on cryptocurrency today, but we are going to be using those cryptocurrency futures contract prices as an indication of what's going on in the market. Nevertheless, make sure you read the NFA Investor Advisory and the CFTC Consumer Advisory on cryptocurrency and virtual currency derivative products. Now that we've talked about that, let me introduce you to Jim Ferrioli, and we'll get into the market here. But Jim, again, as I mentioned, the director of cryptocurrency strategy and research at the Schwab Center for Financial Research. Welcome, Jim. Good to have you here with us today.
Hey Ben, good to see you. I'm fresh back on from 2 weeks of vacation, so I'm primed and ready to go.
Awesome. So, and I mentioned this in the beginning, we've been talking a lot, and you and I, and then Brent Morse has been helping out as well. We've gone through a couple of different iterations of the cycle of this Cryptocurrency Basics webcast. Now we're kind of pivoting into what's going on today and how is that influencing the market based on what's happening with cryptocurrency. So that's where I want to spend the majority of our 30 minutes here today, Jim. And I want to first talk about, since we are post Jackson Hole, we've got some movement in terms of interest rates and the US dollar. And we've got some forces that are perhaps moving Bitcoin as a result of that, but maybe even in anticipation of what was happening in Jackson Hole, the Federal Reserve's vacation getaway to the wilds of Wyoming every year in August. But we started to see Bitcoin moving pretty quickly. And I've got on here on the chart /BTC, which is a continuous contract for the Bitcoin futures. I've also got in this grid, Jim, the Ethereum futures /ETH and the Solana futures. And so we see a very similar type of movement in all three of these cryptocurrency futures. So right around mid-August, as we started to see, maybe some volatility settling out of the rest of the market, volatility started to explode in the cryptocurrency space, and we saw a big run up, specifically, I think, in Bitcoin that kind of dragged everything else with us. Talk a little bit about that, will you?
Yeah, I mean, talk about the worst 2 weeks I could have done, chosen to take a vacation. So not this past week, the week prior, there was a pretty epic short squeeze in Bitcoin. As you can see on this chart, we traded from the 60,000s up to briefly into the 80,000s, or
Yeah.
right by $80,000. And so one of the hallmarks of the crypto market is there's a lot of leverage behind it. And so what we're looking at here, we're looking at listed Bitcoin futures, which is actually a relatively small share of the total outstanding crypto futures market. There's decentralized exchanges which offer contracts called perpetual futures. So these don't have an expiration date, like the futures on the
Right.
CME do have. And the amount of open interest on the crypto native side tends to be quite larger. Because these are not managed by a central clearinghouse, they automatically get liquidated if certain thresholds are reached. And so what we saw
Oh, right. Okay.
last week is there was a kind of a mismatch between where shorts and longs were positioned relative to spot. And that's like the classic short squeeze, right? People are too negative in the short term.
Hmm.
Investors are very positioned for what they think is going to be a decline in prices, and some sort of a news event, something spikes, prices higher, which kind of causes investors to have to close out their positions. Now, in the case of a traditional futures contract, once you're underwater, you have to deposit more margin if you want
Right.
more collateral, rather, if you want to keep that position open. Again, because there's no central clearinghouse in crypto, these products are then automatically liquidated. And so what we saw was collectively over about a 2 week period, about $10 billion in short open interest contracts were liquidated. Or rather, $10 billion in total contracts rather were liquidated.
Sure.
And so that was the squeeze there. And so it was really a reset in the market structure. This is very common in crypto. In the fall, when we entered the bear market, there was a surprise announcement of these like 100% potential China tariffs, if you guys recall. And on
Yep.
that day, about $2.5 billion in long futures got liquidated. And so that actually led to several weeks of cascading liquidations. And so typically these large moves that we see in crypto markets are a result of leverage being unwound. And so that's just the latest here. And so heading into Jackson Hole, there was actually a reset in terms of leverage. If you look at kind of the total open interest and kind of where clusters of open interest is around spot prices, it's more balanced now. And so I think that kind of showed what we saw in Jackson Hole was some hawkish commentary from Chairman Warsh. The bond market investors, they started to price in a 50% chance of a rate hike at the September Fed meeting.
Yeah.
Right. And so typically this is something that would have a negative impact. We saw the dollar rise. This would be a negative impact on a cryptocurrency or really any non-dollar denominated asset. Um, and Bitcoin did sell off. It was down about 3% on the day on Friday. But the caveat is Bitcoin generally moves anywhere from 1.5 to 2% on a daily basis in either directions. So relative to Bitcoin's average move, it wasn't that much bigger. And part of that is because you kind of had this reset in the market structure around these kind of levered futures contract. There was less longs to be liquidated from that 3% move. And so while it was still a down move, it was kind of relatively constrained to what you might actually kind of typically expect following kind of a statement like that.
So let me ask you this, Jim. I mean, given all of these forces, right? And so we had the Fed, or at least the Treasury, doubling down on their liquidity support, looking at doing buybacks, moving that from 2 billion to 4 billion in terms of those buybacks of Treasury securities. That had a tendency then, in that case, to kind of weaken the U.S. dollar a little bit. Is all of this just leading to maybe keeping cryptocurrency, Bitcoin, at all, kind of stuck still in this range that we've been establishing for really the last 6 months between 60,000 and 80,000?
I
Or is
think
this
so.
giving us a chance to move higher out of this range?
So what I think this tells us is, exactly in February, Bitcoin hit about $60,000, actually related to Chairman Warsh.
Yep.
Again, that was when it was perceived by the market that he was going to be hawkish. He was going to focus on bringing inflation back down to 2%. And that really, if you recall, gold had a big run last year, and that really started the bear market in gold. Bitcoin also traded down from about $70,000 that day down to about $60,000. And it's really held that $60,000 level more or less for the past 6 months. And so the way that we've been viewing it is that the latest short squeeze kind of cleared out some of the bears. And so that probably does confirm that the bottom has been in. We briefly traded back to the low $60,000 earlier in the summer. We actually intraday went to about $57,000, but again, like the overall level has been roughly $60,000. And so what I think that just means
Right.
is that the bear market is probably bottomed here. But to get above $80,000, you probably need something of a more of a fundamental catalyst. And this has been a hallmark of kind of crypto bear markets where they just kind of peter around, they're quiet. People will lose interest after they initially bottom, right? Because they have these very deep sell-offs. They have these large euphoric bull phases, but the
Sure.
periods between them, a lot of the time people stop focusing on them because there's not much going on. And so we may be in more of that type of an environment where it's just going to be, kind of low vol until either something forces it lower or something forces it higher. Now, the initial short squeeze really brought back the debasement trade narrative. If you
Right.
remember last fall, that's all anyone talked about. They talked about gold, silver ended up getting a bid for it. And actually, the notably missing thing was Bitcoin because it was going through its own bear market.
Yeah.
But that really sparked the debasement trade narrative again. Bitcoin's correlation to gold has actually been rising in recent months and falling versus equities, right? And so one of the things we always look at is what cryptocurrencies are correlated to at the moment because they tend to be changing.
Yeah.
And so
I,
we think if you could get a return to like a strong debasement narrative, that could lead you higher. But ultimately, I think you're going to need a real fundamental catalyst, something to make people want to go out and buy spot cryptocurrencies. Something
sure.
stronger than just a 1 or 2 day trade.
Well, and I think that's interesting because we had this 4 or 5 very, very strong up days, and then again just kind of went sideways, hitting that resistance level. I put on the chart here, Jim, a comparison line to the dollar index, right? So the dollar futures. And you can almost see that inverse relationship to the dollar, as we often do with, things like crude oil or other commodities, in terms of a commodity as such priced in US dollars. And I think that's kind of that similar relationship here in terms of that inverse move. And now we see the dollar weakening again a little bit today. And once again, seeing crypto up just briefly and barely in today's trading market. One of the interesting questions that came out in the chat is, hey, it's been a while since I've been able to put weight in, or faith in, what the charts are doing, or what trend lines are doing, what news is doing. What are some of those forces that are moving crypto? And I think this is a pretty good indication of that. And I think you talked about that. The thought that came to me, Jim, when you were talking about the kind of people forget about it for a while, is not so much crypto winter that we talk about, but maybe crypto boredom, because it moves and then it doesn't, and it doesn't give the follow through necessarily that we see in perhaps other more traditionally driven, fundamentally assets, right?
Yeah, I agree. One thing I'd point out about this $80,000 level, which is really important, is if we have a couple different measures of cost basis for Bitcoin,
Yeah.
and they all converge around $80,000. So like the spot ETF products, they have a cost basis of about $80,000. We have a measure called the active investor cost basis. And that just looks at any Bitcoin that's been acquired on secondary markets. So it excludes, if I directly transfer someone, or if I'm a miner
Sure.
and I'm rewarded it. And that's at about $77,000 today. And then there's a couple different measures, but they're all right around this $80,000 level. And so that's really, I think, an important level too, because it's natural. If you bought Bitcoin in the past year or year and a half, you had a quick rally up, you saw a sharp sell off, and now maybe you broke even and you say, not for me, and you sell. So there's
Yeah.
a
Yeah.
strong bit of resistance here. I do think as you get above that, and there are a couple things that I think could get you above that, that actually becomes your new support. And again, classic technical analysis, right? Previous
Yep.
resistance becomes new support. So I think there's some
For sure.
fundamental reasons that that's resistance. The biggest thing is all around the world, financial institutions are looking to adopt blockchain solutions. And so as
Yes.
a result, we are seeing regulation come out to support this, to provide roadmaps. Obviously, they're working on the Clarity Act in the Senate right now. We're actually skeptical that it passes this year. But the SEC recently put out new regulations regarding crypto. And so we think anything that kind of helps put that narrative forward about tokenization and real world adoption of blockchain usage, that could be the thing to kind of bring us higher from here and maybe break out above that level. But again, we don't think that the next step is a euphoric bull market. It's probably
Sure.
what you said, boring.
Yeah. Okay, so interesting. So why don't we pivot here, is the fact that there's been maybe a transition from some of the major Bitcoin, and we'll stick with the Bitcoin narrative, and we'll talk Ethereum proof of stake here in a little bit, or probably in our next webcast. But in this concept, some of these proof of work mining companies have been talking about, pretty vocally, about the shift away from mining and more to, leasing out their compute power to AI spaces, because that's where, I mean, they're going where the money is, right?
Yep.
Is kind of the thought process here. So now you have Mara, which is one of, and we've talked about this particular stock individually a couple of times, one of the larger mining companies. That is what they do. Let's talk a little bit about that move in Bitcoin. Was that enough of a shift in the value of the coin to induce Mara to pivot back to mining instead of renting out compute for AI?
Yeah, I don't think it's enough yet. So first, if you have a company like Mara, they've just announced that they're going to do this. It takes
Yeah.
time to actually build out the infrastructure to be able to provide the compute for data centers, right? It's different equipment. And so it is a broader transition. What I earlier in the year, as the AI trade was doing well, it's been selling off in recent weeks a little bit. It's had a bit of a correction, right? Everyone was
Right.
pointing to how the miners were doing so great because, yeah, they were getting this AI bid. What we think is that over time, the market becomes more balanced. It's a clear no-brainer today. If you have the computing resources, you can earn a lot more money using your resources for these AI data centers for inference.
Sure.
But again, it takes several years to build it out. Some miners that actually started this process a couple of years ago, majority of their revenue is now AI driven. But again, it does take time. We don't think the move off the lows here is enough to make miners change their mind. But we do think that over a several year period, that it does become more balanced. Fundamentally, Bitcoin is a commodity. It's a supply constrained commodity, right? But
Right.
also, compute is a commodity. Right now, there's a bottleneck in it. And so, as market forces do, they're allocating all the resources possible to the means of extracting this compute, right? And so that's what happens in commodity shortages. We don't feel that the compute bottleneck is going to be a persistent thing. At some point,
Well,
there will be less demand for compute because there's going to be more data centers online.
sure.
There's going to be more competition. People look at open source AI models. There's competition in China. So there's all sorts of things that could potentially make these inference contracts that the miners are currently now trying to pivot to less economically attractive over the long term. And so we just think that in the longer term, there's more of a balance between mining and Bitcoin. When it's profitable to be focusing on, or sorry, AI and Bitcoin, when it's profitable to be focusing on more of the mining and high performance computing aspect, maybe during business hours when people are using the large models,
Mhm.
you do that. In the downtime, you want to be mining Bitcoin. If you run a data center, you want to be optimizing your data center so that you're using have the highest level of utilization possible. So that means when
Sure.
it's not profitable to be doing HPC, maybe you mine in the background. And so that's what we kind of think the balance is in the long term. But yes, in the short term, it still makes sense economically to focus on the AI side.
All right, Jim, I want to pivot to another aspect of the cryptocurrency space, and that is so if Mara is the mining space, Coin is perhaps the exchange and trading space. So, given that short squeeze, given the pop that we saw, we can see the very strong correlation. In fact, it's running the two tools that I have on this particular chart. I have a comparison line between whatever the symbol is, in this case, coin, and forward slash BTC, that Bitcoin futures contract. And then I have a correlation study in the lower panel comparing also to forward slash BTC. So you can see Coinbase, which is a trading exchange for cryptocurrency, has a very strong correlation. So if we do see some of these kind of circumstantially driven pops in trading volume, does that benefit some of these names like Coinbase, for instance?
I think so. Think about it from the exchange perspective. The more volatility you have, the more buying and selling you're doing. Coinbase
Sure.
creates revenue based on those transactions. And so I think that directly, that's where you see the benefit. And I think the correlation to Bitcoin makes sense here. Because, right, if you think about it, Coinbase doesn't just trade Bitcoin, they trade all sorts of crypto products. But it's all focused on crypto, whereas now the miners are getting this narrative because they're pivoting away from something unrelated to crypto. And so I think the
Sure.
correlations here will continue to be the same or be similar over time with Coinbase, which is really focused on the cryptocurrency markets, to Bitcoin. As we see more activity, more trading, more volatility in Bitcoin, that should be a positive for an exchange.
So one last place that I want to pivot to, and I know we're running short on time here, but that is this XYZ. I'm going to put this in here, and this is block, and this is so the reason that I wanted to pivot here is because of a comment that you made earlier, which was kind of that race to adopt blockchain into transactional processes. And so not only is block in the payment space, but they were one of the early adopters of that blockchain technologies. Obviously, they pivoted their name to that, right? So let's talk a little bit about this correlation. Again, same correlation line, same correlation study here. Their correlation is a little bit less, obviously, than Coinbase, about 0.81% correlation to Bitcoin, but they've generally been trending higher here, regardless of what Bitcoin has been doing trend-wise.
Yeah, I think it comes down to if you think about the core business model of Block, they're primarily in the payment space, right? If you go to
Yep,
a mom and pop retailer or any type of business, they might be using a Square terminal as their point of sale. So they're really this payment infrastructure provider. Again, they make revenue based on transactions. If I buy something from a mom and pop retailer, I pay on their Square terminal. At the end of the day, the balance that is transferred to the merchant's bank account, Square gets a cut on it. It's a fee, right? They're a payment processor.
sure.
Now, they do have crypto exposure. They own Bitcoin on their balance sheet. And so we have seen periods where Bitcoin rallies that investors will actually reward the stock because it does tie into the total company's total economic value. They also do provide the ability to transact in Bitcoin. And so, again, it's a very small part of their business, the actual Bitcoin transactions. You can buy Bitcoin from them, almost similar to like an exchange. But
Sure.
majority of the revenue tends to be just as a payment provider. And so that's why in times you will see like if their Bitcoin's rising, it generally benefits them because they do hold it on the balance sheet. As more people do look to use blockchain or maybe use Bitcoin rather for just transactions in their everyday businesses, right? They're a provider with a built-in solution for that, so it should benefit them. But the key thing, the key driver of their revenue is really transactions in all sorts of goods, not just focused to crypto.
Interesting. And I appreciate that. Josh Pink, one of our regular attendees here in the webcast, just brought up an interesting comment, and I think this is really an interesting perspective on this. It says, if Block allows you to use Bitcoin as a payment system, but if you believe in Bitcoin, for instance, or cryptocurrency at large as a growth asset for investment and to hold that asset as a growth asset, why would you use it as a payment tool instead of just fiat currency?
So it's a great question, and that's I think that if you were to talk about like the big debate for Block, that would be it. Most people hold Bitcoin as an investment, and so why would going back to maybe using a burger chain or something for an example, why would you want to treat what
Yeah,
is why would you trade an investment for something you're going to eat? It's kind of a silly trade-off. Um, Now, the reason that Block does it is because the founder, Jack Dorsey, is a very passionate Bitcoiner. And so there is also the perspective that people do want to see broader Bitcoin and blockchain adoption. And so by doing that, maybe that does increase adoption. But I totally agree with you. Most people are primarily using Bitcoin as an investment and are unlikely to pay for things in it. But that's not the case. There are companies that have seen their business actually start to grow. There's a burger chain that's popular in the South that accepts Bitcoin now, and they've actually seen their sales really grow. So for
right.
some people, they do want to use it as currency and just as opposed to investment. But the broad, kind of base of Bitcoin is primarily using it as a store of value, as an investment, as opposed to actually currency.
Awesome. Jim, great stuff today. Great commentary and discussion about some of the forces that are at work in the space, as well as some of the individual names. I wanted to leave everybody with this additional resource. If you've not been here already, and simply one simple ask, when you go here to youtube.com/@ Trader Talks webcasts, and you search for cryptocurrency, just click on subscribe if you haven't done so already. That makes it easier for you to find the content here. It makes it easier for other people to find the content. It also pops it up in the algorithm. It makes it a little bit easier for us to get our discussion out here in this mix. But we've got our cryptocurrency basics playlist. So if you want to go back and look at some of the additional content that Jim and I and Jim by himself have provided, it is here in the Trader Talks webcast page. we start to talk a little bit about some of those forces at work and the process of proof of work and proof of stake and all of those things. You can join us here. We're going to be back here not next Monday because that is going to be Labor Day, but on the 14th we will be back here again to talk more about cryptocurrencies. By the way, if you go to schwab.com/coaching, you can start to jump into some of the other locations of content that we have, including those that Jim provides. Just hit that Learn tab here on schwab.com, and you're going to be able to find a lot of the commentary that Jim provides, as well as others from our Schwab Center for Financial Research in a variety of different areas. So thanks once again, Jim. Appreciate you being here with us. Thanks for sharing your Monday morning with us, and thanks to all of you, especially those of you that are participating in the conversation. If you're watching this in the recorded version, leave us a comment. My thanks to Scott and to Patrick for helping out in the chat and our great production staff. And we will see you guys again in 2 weeks in this Cryptocurrency Basics webcast. Have a great day, everybody. We'll see you soon. Bye-bye.